Hello and welcome back to my channel IQD to USD. The impact of U.S. energy policies under former President Donald Trump on Iraq's economy and the value of its currency, the Iraqi Dinar, has been profound, with lasting consequences for Iraq's financial stability. Iraq's economic health is closely tied to the dynamics of the global oil market, its reliance on oil exports, and the geopolitical factors shaping global energy production. During Trump's presidency, the U.S. achieved a remarkable milestone: energy independence. This achievement positioned the United States as the world's leading producer of oil and natural gas, dramatically altering global energy markets. The increased production from the U.S. had significant implications, not only for domestic energy consumption but also for global oil prices, with the potential to disrupt oil-dependent economies like Iraq's. Under Trump, the U.S. implemented energy policies that prioritized domestic oil and natural gas production. The rise in U.S. output contributed to a global surplus of oil, which in turn had the potential to exert downward pressure on oil prices worldwide. This created a challenging environment for countries like Iraq, which depends heavily on oil exports for government revenue. Iraq's economy, more so than many others, is intricately linked to fluctuations in global oil prices. Any change in the price of oil can have an outsized impact on the country's fiscal health, the stability of its currency, and its overall economic outlook. As the U.S. ramped up its energy production, global oil prices were influenced by the surplus in supply. While higher production levels were beneficial to the U.S. economy, they had mixed effects globally. For oil-exporting countries like Iraq, which heavily rely on the sale of crude oil, a decrease in global oil prices could translate into a sharp decline in government revenues. Lower oil prices would directly reduce Iraq's capacity to generate income from oil exports, thereby weakening its overall economy. The Iraqi dinar, as a result, is particularly vulnerable to these price fluctuations. The currency is primarily pegged to the U.S. dollar, and when global oil prices fall, Iraq's reserves of U.S. dollars also tend to diminish. This makes it more difficult for the Iraqi government to maintain the value of its currency. In such a scenario, the Iraqi dinar could experience downward pressure. With less revenue from oil, Iraq's foreign exchange reserves would be under strain, making it increasingly challenging to defend the dinar against devaluation. The consequences of this devaluation extend beyond mere currency fluctuations. Iraq's dependence on imports, which are often paid for in U.S. dollars, exacerbates the situation. If the value of the dinar falls against the dollar, Iraq's ability to purchase goods from abroad becomes more expensive. This rise in the cost of imports could lead to inflation, which would further harm the purchasing power of the Iraqi population. For a country already struggling with high levels of poverty and unemployment, inflation can create significant economic and social strain. Additionally, the fiscal pressures Iraq faces from fluctuating oil prices could lead to further complications. Iraq's national budget is heavily reliant on oil revenues, meaning that any decrease in oil prices directly impacts the government's ability to meet its financial obligations. A significant decline in oil prices could lead to widening budget deficits. To cover these deficits, the Iraqi government might have to borrow more, potentially increasing its debt load and further destabilizing its economy. With oil revenues shrinking, investor confidence in the Iraqi economy could take a hit, which in turn would erode the financial stability of the country. The decline in investor confidence could also negatively impact Iraq's ability to attract foreign investment. The country's oil sector, which is a key area for foreign capital inflows, could see a decline in investment as oil prices fall and the economic outlook worsens. Investors may seek more stable or lucrative opportunities elsewhere, particularly if Iraq's energy sector becomes less attractive due to the fluctuating price of oil. This could lead to a further weakening of the economy, which in turn could exacerbate the dinar's devaluation. The loss of foreign investment would also hinder Iraq's ability to diversify its economy away from its reliance on oil, further entrenching its vulnerability to oil price fluctuations. One of the more pressing concerns for Iraq's currency and its broader economy is the challenge of diversification. The Iraqi government has long sought to reduce its dependence on oil by promoting other sectors of the economy, such as agriculture, manufacturing, and services. However, despite some progress, Iraq remains heavily reliant on oil revenues, and any disruption to oil markets, whether from U.S.,